Cha, reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders in any market. So if that sounds like you are in the right place at the right time. Now, if you are a new viewer, welcome to my channel. I do want to let you know I have almost 400 quick videos that will help you get introduced to trading or improve your results. No matter where you are in your journey, I'm pretty sure I have something on my channel for you. And if you don't find what you're looking for, you can always leave me a comment down below and I will add your video request to the queue. If you are a returning viewer or a subscriber, thank you so much for coming back. I really appreciate all of the love that you guys show on the channel. But if you want to continue to support me and to help this channel grow, just make sure you like this video, leave a comment at the end, but more importantly, subscribe. Not only does it keep you in the know with every time I post content, but it also helps to push this channel further into the algorithm so that more people can find it. Now, if you guys would like to connect with me outside of YouTube, there are several ways to do that. I have my trading view posted below, as well as my community that you can join for free for 7 days. Now, if you'd like to join my community, I do post trade ideas more frequently. I host sessions every other Sunday at 6 p.m. EST, and you can always contact me to ask any questions and just really have that community feel. Now, in today's quick video, we are going to be talking about how to trade without indicators. This is a topic that I've covered multiple times on my channel, but it's something that I think is important to reinforce and to remember. Now, I love a good indicator if it adds to the analysis, but if you're a new trader, it can be a little bit confusing if you don't even understand what's happening with basic price action. So, I'm going to use this video to show you guys how to understand the market a little bit and how to trade without indicators. Now, I always like to do a quick little review just for people who may be new here, but even if it is repetitive, repetition is what's going to help you solidify these things and make those changes in your trading. So, firstly, we know that the market can be trending one of three ways. It can be trending up, right? And this can be for a certain period of time, like an hour, or it can be over the course of a couple of hours. Now, when you get more into trading, you'll be able to choose whichever time frame works best for you, but I'm just using the hour for example purposes. Now, when the market is going up, if it's only for 1 hour, you will only want to pay attention to what happened for 1 hour. Because this is the hour time frame, each of these bars are an hour. Now, blue candles represent a case where price opened lower and closed higher, and sell candles represent a place where price closed, opened higher, and closed lower because price is being pushed down. Now you can have buying for 1 hour, or you can have buying for a couple of hours, as we can see demonstrated here. Now, to recognize a buying market, there are three ways you can do this. You'll see that there are more blue candles than red candles over the course of a certain amount of time. You may see that the market appears to be going up. Visually, it just looks like steps, like you're going up. Or you may see that this was a high, then the market created a new high and a new high and a new high. And these are called higher highs because that is a sign of a buying market. Not only will the market have higher highs, but because price is being pushed up overall, you will also have these higher lows forming. Now, to identify when the market is selling, you can see one red candle, or you'll see a series of red candles letting you know that price was pushed from one level to another. You'll also see that in a downtrend or a selling trend, the market appears to be going down. Think about it as steps going down. And then you'll also see that there was a high, and there was a lower high, and a lower low, and a lower high, and a lower low. So a buying trend and a selling trend are almost the same, except they're just the opposite. Now, the third way that the market can be going is consolidation or ranging. And this is when you will see equal blue and red candles over the course of a period of time, causing the market to not have a definite shape like it did when it was buying or selling. Instead, it's ranging between two key levels, and it's almost a little bit predictable where it will buy and sell. Now, if you guys can see those three different types of market structures, just go ahead and comment market structure down below so I know that you're following along in the video. Now, it's important to be able to determine which way the market is going because this is going to help you find your entry points and your exit points when it comes to the trades. So the first thing that you would want to do is you would want to actually mark up some key levels, right? I'm just going to put the chart in replay mode. You would want to mark up some key levels. Now, key levels are places where you can see that the market has obviously bought and obviously sold. You can think about these like the ceiling and the floor of a building. So I'm just going to take some of these lines away so that we can do this together. So if we get to the top of a house or a building, there's going to be a ceiling or a roof, and we can't go any higher than that. Once you see something like that happening, these will be your opportunities to sell. Then you have times in the market where it's not getting any lower and the market continues to buy from that place. We can consider this the floor or the basement. Now, when you are doing your analysis, you should mark up as many ceilings, right? And as many floors as you can find, because as the market flows through these levels, these are going to be your entry and exit points. Now, I've drawn some lines, and we can see here that this was a nice floor or level of support because the market came to this area multiple times and it bought, making this a strong area of support. And even over the course of a few hours, it also bought at the same level again. Now, within some more hours, the market also sold at this place, so it was ranging for some time. So, taking that little bit of extra time to mark out your support and resistance is going to help you determine if you should be buying or selling at that level. But it's also important for you to recognize how is the market actually reacting at that ceiling or at that floor. Now, again, when the market is consolidating, we kind of know once it hits that ceiling, it's going to sell, and once it hits that floor, it's going to buy. But what actually happens when the market goes above the previous levels? So here we can see the market was ranging, and because we've already taken the time to mark the levels, you want to pay attention to what happens when the market gets to the floor. Is it supported and price pushes back up? Is it rejected at the ceiling and price pushes back down? Or does it decide to get on the elevator and either go down to the next level or go above? Now, if price breaks above the previous high where we were selling, we would want to enter the trade for a buy because a new level is being created. If price goes below the previous floor, we would want to enter for a sell because a new level is being created or revisited. So we're going to go to the next bar and we can see that price is getting pretty close to that ceiling. However, we do have a breakout. Now, a breakout is a strong sign that the trend is going to be continuing the direction that it was in, or a reversal is happening. Because we've already had a lot of bullish motion or uptrend happening, this break of structure on the upside is just a continuation to the next level. So this should be pretty simple so far. All we did was mark our previous levels of support and resistance, and we waited to see how the market reacted around that support, resistance, ceiling, or floor. So we do get that break of structure here on the upside, letting us know that the market may continue to buy. So in a situation like this, I would enter for a buy. I would set my stop loss right below the previous low, and I would set my TP at the next level. Now, once we get to this step, all we have to do is wait to see how it plays out, and we can see that our take profit was hit in a couple of hours. Now, as the market continues to press up, we can see that it also broke past our new ceiling, so it could potentially go to our next level or it can come back down. So let's see what happens if we enter this trade for a buy. We set our stop loss below a previous low. We set our TP at the previous high, and we're going to just wait it out. And we can see our take profit was once again hit, and all we had to do was wait. Now that was a buy example. If that made sense to you guys, the break of structure and the TP at the next level, just go ahead and drop market structure down below so I know that you have made it this far in the video. Now I want to show you guys a sell example as well. And remember, we are trading without any indicators. So if you like to use indicators for additional confirmation, you can definitely do that. So I'm going to go ahead and rewind this just a little bit, and we are going to do the same thing again, but this time we're going to look out for a sell. Now, the cool thing about trading is I've already marked out my levels. So no matter if the market is buying or selling, I will have some type of guide or on where I should go or what I should do. So in this example, we can see that we have the market has hit a floor, the market has hit a ceiling, and we can see that price has started to come down because it's rejected that ceiling. Now, just to give you a quick refresher, once you've set your levels, the market will either reject the ceiling and continue to sell, it will break above the ceiling and it will buy, it will break below the floor and continue to sell, or it will come back down to the floor and continue to buy. So the first thing that we have is a strong rejection off of the ceiling. That is going to give us what we need to enter this trade for a sell. So we're going to click sell. We're going to set our stop loss above a previous high. And we're just going to go ahead and set our take profit at that next level we can see below us since this is a sell. Now we can see that the market did steadily sell, and eventually it's going to come back down and it's going to hit that take profit. Now, sometimes there will be a bit of consolidation. As we can see for this trade, we were stuck in consolidation for a few hours. However, one thing I want you to note is that the market never came back up to hit our stop loss. And once it got back down to the floor, we were able to buy for a little bit. So if you guys can see how setting your key levels and trusting your trade to play out is helpful, just go ahead and let me know down below in the chat if this is helpful. Now, I do just want to invite you guys to subscribe to the channel if this video has been helpful. It is my goal to help as many people as possible become independent and profitable traders by simplifying how to read a chart, right? How to find the right entry points, but more importantly, how do you actually make money and sustain yourself as a trader? Now, if this video was helpful and you made it this far, just go ahead and give me a thumbs up, leave me a comment to let me know what you learned, or more importantly, subscribe to the channel because all of these things will not only support me, but they will help the channel grow as well so that more people can find this and we can create more rich friends. But that's really all I have for you guys today. Until next time, rich friends.